Going for a couple of these auto stocks. Actually, it's varied because we have Tata Motors, which is gaining, Maruti, which is up around 2% But on the downside, there's a stock such as Bajaj Auto, which is losing the most, along with Hero MotoCorp, which is down around 0.7%. So there is this bit of a divergent trend which is coming through. Dr. Reddy's is also down, lower for a couple of these pharmaceutical stocks such as Glenmark as well from the broader market. So DRL down 1.7 and Glenmark down around 2% the last time I checked. Let's get in another query then. Vinayak Satish Kumar writes to us from Bangalore. He holds 20 shares of Page at 31,000 since past 3 months. Long-term investor and wants to know whether to hold or sell. Well, what would you recommend, Vijay, on something like Page Industries, fundamentally strong, but obviously that exuberance has now come off?
Well, I think that, it is a consumption story for sure and a huge brand. And we cannot just undermine the size and the clout of the brand. It still exists. One thing that I've been mentioning since almost 1.5 years is that, the disposable incomes have gone down. That's why we are seeing a dip in the lifestyle spending. So these are lifestyle stocks. People have money, they will buy brands, undergarments and all. So I would say that, it's a good company to have in a portfolio. I don't see any harm at such a price. So one could hold on to the stock as of now. And I see 25,000 is quite possible. So even if somebody wants to average around, say, maybe 21,000, it is not a bad idea. And he would surely get around 4,000-5,000 rupees on this stock. So yes, going back to those 34,000-35,000 levels would be tough in such market situations. But yes, I would say that hold on to the stock as of now and average once it comes around 21,000 odd.
All right, that is as far as Page Industries is concerned. Remember when it reported its results, it was the first time ever since its listing that the company did not, in fact, they had the weakest sort of sales growth coming by. At that point in time, it was trading at around 68 times FY20 earnings. Post this correction, still trades at 41 times FY20 earnings. So not particularly a cheap stock and disappointing on the growth front, but strong fundamentals. Prakash, talking about technicals of the Page industry, people talk about inverted head and shoulder patterns, etc. If you take a look at the one-year chart, what sort of pattern do you see out there?
Some people see a lot of patterns.
Okay.
To me, when I see a pattern, is a parabolic rise. When you see a parabolic rise, there's a parabolic drop out there. And I'm seeing a drop, quite possible if the pattern is correct, that we may see levels even closer to 17,000 rupees. So it's weak charter. Psychologically, 20,000 may hold. But this kind of parabolic rise brings it's not a head and shoulder, could be head and shoulder as well, but it's a parabolic rise. So I would say that unless we get strong support, and when we get closer to strong support, that's the time to start an SIP.
Okay. All right. So that's on Page Industries. Now, Rohit Singh writes to us from Kolkata. He holds 900 shares of Jindal Steel at 184 since past 2 months. Short-term investor. Wants to know whether to hold or sell. So Jindal Steel is the stock that we're looking at. Loss on that one as well. Prakash, what's your recommendation?
I would say Jindal Steel, perhaps hold it now and have stop closer to around 139 or so and continue holding. If it breaks, exit and just have a level of 170 in mind. If it crosses 171, oh, be happy is going up. Then perhaps we could see level closer to around 200 as well.
Okay, so 170 is the level that one needs to watch out for. Vijay, the metal space for the short term, do you think the down cycle has begun, or maybe the viewer can hold it?
Well, I think that there have been positive voices as far as the trade wars are concerned, as far as the Chinese intention to sort out the issue is concerned. We saw the carnage just because we saw a huge hue and cry over the trade wars, and we saw all the metal counters cracking. But I think that at these levels the risk is very, very low. And if somebody wants to hold on in a longer term perspective, I like stocks like Jindal Steel, like Hindalco, Vedanta. There might be short term hiccups, but I don't see very long term problems in this stock, and these are good valuations to accumulate stocks. And mind you, a stock like Jindal Steel used to trade at maybe around 1,500 few years back, and we have seen the carnage happening due to the corporate governance issues and other issues in the company. But now I think it is more or less stabilized. The results are stabilizing, And if at all we see some revival in the domestic consumption story, in the infra story, all these steel stocks should do well. So I would say that no need to panic at these levels. There might be some corrections, but do not panic at all. I think that all the good metal counters, good quality companies are bound to a leap if somebody looks at 2 to 3 years perspective. So no problems in the longer term.
Okay. All right, Vijay as well as Prakash, thanks very much for joining in and taking us through all of those queries today. Well, for the market doing well in terms of a couple of stocks, we've been pointing out how autos and a couple of rate sensitives, basically financials, have been gaining. But besides that, we have from the broader market something like an MEP Infra, Omkar Speciality, which is up, but not that much in terms of volumes. We do one thing, we're going to wrap up on this show. But as we do that, remember to email us all of your queries and we'll be addressing them with our experts. Always stay tuned. Closing bell will take you through the last hour.